So now I would like to bring up Will Donwell. Will is the chair of the Board of Review for the City of Detroit, and he's also the District 4 representative, and he is going to share with us what the Board of Review process is. So if anyone is considering appealing their assessment that they received from the City of Detroit, you want to listen very closely to the information that he shares.
Good morning, everybody.
Good morning.
Can everybody hear me? All right, great. My name is Willie Donwell. I'm the Chair Administrator of the City of Detroit Board of Review. The purpose of me being here today is to kind of give you some understanding in terms of appealing your property assessment, but we're going to cover a couple little things first before we get started. One, I want to thank Sarah Arnold and the City of Detroit, the Wayne County Treasurer, for coming out this morning and sharing information with you. It is critical that you know and understand things that are going on concerning the assessment of your property. One of the things in the assessment office through Sarah Arnold has left information at the table. There is a reappraisal going on with the City of Detroit right now that has not been done in over 50 years. So they're individually looking at property. There again is a circular that the assessment division has. That information is at the table, and you want to pick that up and look at it. I personally cannot speak a lot about it because I sit on a board that's supposed to be fair and impartial, and I need to make sure that I always act in a manner that represents that, so that when you come in front of me, if you so choose to, you make sure that you have all the proper information in terms of whatever questions you may have answered when you appear in front of the Board of Review. In addition to that, there's also a property tax pamphlet that's being left at the table with some frequently asked questions relative to tax payment process and other information regarding your assessment. So you may also want to pick that up before you leave today. All right, again, my name is Willie Donwell. I'm the Chair Administrator of the City of Detroit Board of Review, and there's a couple of things that we're going to cover today. I want to let you know that I am not the assessor, so please do not egg my car on the way out. We're going to talk about some words today like assume, tentative, and opinion. When you get that tax bill, there is nothing tentative or assumed about it, and the only opinion of the opinion of the treasurer is that you should pay it. So make sure that, again, before you get that tax bill, do everything possible to make sure that your assessment is fair, because the assessment is the beginning stages of your property tax. The Board of Review. The Board of Review, and some of these slides I'm going to go through rather quickly because if I try to read every line, we'll be here all afternoon. But the Board of Review is a 9-member body that hears and determines matters concerning classification and property tax assessments. We are a 9-member body, each of us appointed by City Council, 1 from each of the 7 council districts, 2 at large. We should have some knowledge of either real estate, property taxation, taxation in general, or something else that's relative to the idea of finding or determining matters concerning real estate property tax. In that, though, each Board of Review member should come from our neighborhoods. I'm from District 4, and so I not only represent the Board of Review as a whole, I represent you. And my background is a number of things. 30-year veteran of entertainment business. I represented individuals including Prince and Steven Seagal. I have been around the world literally probably 4 to 5 times, and I have dealt with matters of taxation in many different countries. So my background in taxation is somewhat extensive. While actually I have no official degrees in any of it, I have found ways to make opportunity available for my clients, as I have found to make opportunity available for the citizens of Detroit. All right. 2/3 of the Board of Review members must be property owners of the City of Detroit, and we must live within the City of Detroit. I know some years ago there was a change in the law in terms of residency relative to city employees, but it is in the General Property Tax Act that electors of the local assessing unit has to be elected to the board, meaning that you have to live within the City of Detroit. we're going to move on to the reason why we are taxed. The General Property Tax Act. The General Property Tax Act is what is the defining factor of all property being taxed in the state of Michigan. The very first section of the General Property Tax Act states that all property, real and personal, within the jurisdiction of the state not expressly exempt shall be subject to taxation. That means everything. So when you hear about a church, when you hear about an individual, when you hear about different companies receiving abatements or adjustments, when you hear about different zones being created relative to adjustments and taxation, it was because there is a section in the General Property Tax Act that either exists or was created in order for that to happen. Further interpretations of the General Property Tax Act will be determined and expressed by the State Tax Commission, which is the governing body through the Michigan Treasurer's Office that deals with real estate and property tax. March Board Review Authority. The Board of Review is not the assessor. It is not our job to be the assessor. Our job is to make sure to determine whether or not your assessment is fair and not how much tax you will pay. We deal with classification of property. We need to make sure that your assessment is set at least 50% of the true cash value. It should never exceed 50% of the true cash value. There are times or instances where it may occur, but those are dealing with special projects or special things that are dealt with in a very specific way. So it's not that it cannot happen, but it's based upon, again, certain other practices or policies relative to certain abatements or adjustments through the State Tax Commission. We cannot make wholesale changes across the board, meaning that I cannot come into Morningside and say, your tax is $2, your tax is $2, your tax is $2, your tax is $2. We have to look at every individual case individually and make a determination on the factors concerning that particular property. If we make a change in the assessment, we also need to consider the fact that it may change the taxable value. The taxable, and I'll go into this a little bit later, the taxable value is actually what determines how much tax you're going to pay. We can make determinations on property tax exemptions, but it must be done in accordance with the General Property Tax Act and consider other matters that may fall within our purview in accordance with or according to rules of the General Property Tax Act that is given to the Board of Review through the State Tax Commission. Oh, Proposal A. Some of us love it, some of us hate it. Proposal A was voted in March 15th of 1994, took effect in 1995. It established taxable value. Previously, prior to Proposal A, everything was being taxed based upon assessed value. Taxable value allows an opportunity to have the calculation or the portion that's used to calculate your tax set or capped, as it's called, and only adjust by the rate of inflation no more than 5% each year. Again, prior to that, it was assessed value only. One of the things, I was waiting for that truck to pass. One of the things that occurs through the course of time is that your assessed value will fluctuate with the market. We've seen some bad times where the market has gone down to unbelievable numbers that we never thought we would see. And now we're seeing a turnaround. We've seen times before that where our assessments were really high. But what Proposal A did in all of that, when assessments were going up, taxable value could only increase by the rate of inflation. So you did not see that big jump in your tax bill. And when the market was going down and the assessed value fell below your taxable value, it forced your taxable value down to be competitive with what the market was bearing. So the idea was that you would not overpay. But as the market will increase, you will not have to worry about your taxes jumping up as the market would. Your taxes are only going to increase by the rate of inflation, no more than 5% each year. And last thing I want to mention, your taxable value should never, ever, ever be higher than your assessed value. The assessed value, if it comes below the taxable value, it will force the taxable value down. And I want you to always remember that key point as I continue going through when we start talking about the assessor's review and the coming before the Board of Review. Yes, ma'am. Your taxable value can never be higher than your assessed value. So if your assessed value is here, your taxable value will increase by the rate of inflation, no more than 5%. But if your assessed value comes down, it's going to force and stay equal to the assessed value, the taxable value, because the taxable value can never be higher than the assessed value. Ms. Arnold covered this next slide a little bit. Ways to reduce your tax obligation. One, principal residence exemption. If you own and live in the home as your primary residence, you have the opportunity to have it classified as what's called a principal residence exemption. It eliminates the school operating millage from your tax bill and in turn reduces the amount of tax that you pay. What that means in dollars and cents is that on average, the current non-homesteaded property or property that does not have a PRE in the city of Detroit is about $89 per thousand. A property that does have a PRE in the city of Detroit is about $69 per thousand. So that's a big difference. On a property of $1,000, that's a lot. Neighborhood enterprise zone, neighborhood enterprise zones, if there are NEZs, there are actually 3 different types. There are new, rehab, and homesteaded. New is for new construction that is built and that has a NEZ process that is, excuse me, established by the state of Michigan, done through the city of Detroit. You'll get a certificate, it's for 15 years, and you'll be taxed at the NEZ new rate. Once it goes away, it uncaps. I'm sorry, not uncaps. You will be taxed then at the normal homesteaded rate, whatever it is for that particular year, when it adjusts, and it will be that going forward. Again, it's for only 15 years. Same thing for the NEZ rehab and homestead. For the NEZ homestead, which I want to say Morningside and East English Village are 2 of the territories. If you own, if you purchased the home after 1997, so who purchased the home after 1997 in this area? Okay, so you have the who has or does not have an NEZ? All right, so you have NEZ? You do not have an NEZ. Okay, so the NEZ process is very simple. You come down to the assessor's office, you provide the information that's required, and the only thing that you have to do is say that you're going to do $500 worth of repairs over 3 years. And it will adjust the city of Detroit's debt portion on your tax bill. So and what they do is they separate you will receive 2 tax bills. They separate the land and the house. The land is called the ad valorem, and the house is called the special acts parcel. It will be typically starting with a 27 parcel number, and that is the portion that will receive the adjusted or lower tax bill or lower tax millage rate. Homestead property tax exemption, and I'm going to get more into that in detail at the very end. Is another way, also with PA 161, disabled veterans exemption, and then the Michigan Homestead Property Tax Credit, which you can apply for each year if you meet the guidelines through the state of Michigan on Michigan Form MI 1040CR. One last thing I think I missed was the senior citizen waste reduction fee. If you are at least 65 and total household income is $40,000 or less, then you have the opportunity to have your solid waste fee cut in half. So let's talk about some owner responsibilities right now. If you purchase your property, it is your responsibility to file that information with the local assessing unit, which in this case is the City of Detroit Assessor's Office. You must file what's called a property transfer affidavit, or the common term in the assessor's office is a PTA. If you do not file it within 45 days, you could be fined. For residential property, it is up to $200. It's $500 a day. After 45 days, up to a $200 penalty. And oftentimes, we will find individuals who have not filed at the same time trying to find assistance with the county treasurer because they did not have a PRE. So I would suggest that you talk to someone in the assessor's office in terms of finding some possible relief in terms of maybe waiving that fee or reducing that fee. The principal residence exemption is an item that is definitely required for most and all probably exemptions or adjustments as it relates to the paying of your taxes. If you have not filed a principal residence exemption and you've owned the property for 10 years, unfortunately, there is nothing in the law that gives the Board of Review or the assessor or the State Tax Commission the ability to go back 10 years and make that adjustment. But we can go back, we can do the current plus up to 3 years, the 3 previous years. So if you came in today and did a PRE and it was found that you did not have a principal residence exemption on your record card, then we can adjust the current plus 2015, 2014, and 2013. If you have back taxes, that will, trust me, help you tremendously, because again, it may allow you to find some assistance in some of the other programs that's out there. Perfect example, DHS has a program where their cap, I believe, is $2,000. And if PRE may be able to help you get under that threshold to be able to find assistance in the payment of your taxes. Review of your assessment record. You want to know what the assessor has on their records relative to your property. When I first started in 2007, the assessor's office was managing 458,000 records, both current, retired, and other. And a lot of that is being cleaned up. But through the course of the time that I've been there, there are a number of things that will occur relative to individual records that the assessor's office may not be aware of. Prime example is on your record card, it may have a garage, and that garage is not there anymore. You're being taxed for a garage that's not there, because a garage was definitely a part of the consideration in the initial mass appraisal that was done for your particular property. While, again, we take great caution and care in reviewing everything, there is limited time in which the Board of Review and the assessor has to make corrections relative to any adjustments. So prime example, and we're going to get into this a little bit more in just a second, everything is based on tax day. Tax day in terms of real estate in the state of Michigan is December 31st. So what was existing with that property as of December 31st? All right, the next thing that we're going to cover is, you've all seen this, notice of assessment. This is not a bill. And oftentimes, because it has a dollar value on it, people think that it is a bill. This is the beginning part of, based on December 31st of the previous year, what the assessment or assessor has determined the value of your property to be. It will have a assessed value, a taxable value. It will show changes in value. It will have your information on it. It will have your name, your address, city, state. It will have your parcel number, property address, some very specific things as to the notice, making sure that only the taxpayer of record or authorized agent can file an appeal. And again, any changes relative to, or any possible changes relative to what the taxes may be on your property. All right, so each year this occurs. Notice of assessment and related information is on the notice of assessment. You want to review all the information on that notice of assessment very carefully to make sure that it's correct. If you do not believe the assessment notice is correct or the information is incorrect, file an appeal. And all appeals are filed in room 804 in Coleman Municipal Center during the prescribed dates. And I'm going to get into that in just one second. We're going to talk a little bit about how your taxes are calculated. And I'm going through all of these things because it's all relevant relative to putting together your data when you come in front of the Board of Review. Because again, the Board of Review cannot make a determination on how much tax you pay. We can only make a determination on your assessment. So I'm trying to make sure that you are armed with the information that you need in order to make a fair determination on where you want to be. All right. ABC, assessment, budget, and calculation. Property tax is used to pay for essential services in the city. And so the assessment is the very first stage of how determining the value of the property. The city will determine a budget in terms of what it needs to cover its critical services or essential services, and a calculation is done to determine how much is needed, and then whatever portion falls under property tax is applied to all the properties within the city of Detroit based upon through the assessment process. But it's your taxable value that is used to actually calculate your tax. All municipalities require that everyone pays their fair share. Assessments, again, is the beginning stage of property taxation. The SEV or state equalized value, is determined by the value of the property based on tax day of December 31st. The assessment is then determined. A notice of appeal may be done by you. A notice is provided and an appeal may be filed by you through the process. If you file no appeal, then more than likely the assessor will just allow those numbers to go through. The Board of Review, because you did not appeal through the assessor's process, will then just move those numbers forward. We will sign off on the assessment roll on the first Monday in April. On that Wednesday, it transfers to Wayne County and to Wayne County equalization. The equalization process occurs at Wayne County, and then all the counties send their information to the state of Michigan, and then the state of Michigan does a equalization for the state, and there goes the state equalized value. Remember that assessments will adjust according to market conditions. Taxable value will increase by the rate of inflation, but not more than 5%. The taxable value is used to calculate how much you will pay. The taxable value, and this is how the taxable value is calculated. The current year's taxable value equals last year's taxable value minus any losses. Again, how I talked about that garage being torn down. The garage being torn down will directly affect your taxable value, so that's a loss. It's then multiplied by the CPI or the rate of inflation. And then any additions. So you tore down a garage, but you built a new rec room with a pool in it. That will be added to the taxable value because that directly affected not just the assessment, but the value of the property. All right, then the taxable value is calculated against millage rates, and then fees or other things may be added to finish off rounding out your tax bill. And fees are, again, like your solid waste fee. Solid waste fee is a fee and not a tax. All right, so with all that being said, let's get into the appeal process. There are 3 possible steps to appeal your assessment. And I'm going to keep using the term assessment because, again, the Board of Review cannot determine how much tax you will pay. We can only try to make sure that your assessment is fair. All right, the assessor's review, excuse me. The assessor's review is between the 1st and 15th of February every year. It is between the 1st and 15th of February every year. Even if you don't get an assessment notice, you have the right to appeal your assessment. So don't wait on your assessment notice to file an appeal. If you would like to, go ahead and file it. And at that point, they have to still share with you the information that was determined as of tax day, December 31st, and what your new assessed or taxable value may be. If you're not satisfied, well, I'll get into that in just a second. So the March border review is the next step. If you're not happy with the decision that you hear from the assessor's review, you must file that by the second Monday in March. It must be filed by the second Monday in March. The border review at that point will set up an appointment for you to come in for a hearing. And if you're not satisfied with what we say, you have the right to take the border review to the Michigan Tax Tribunal. And I will admit, sometimes we get it wrong. But I want to go back to something that I said earlier. The city of Detroit, when I first started, had 458,000 parcels of land or parcels between land, personal property, and other things in its database. And so there is a lot of information that goes back and forth. And that's why it is critical for you to come in with as much accurate information as possible. Commercial and industrial real estate does not have to come before the border review. They can go straight to the Michigan State Tax Tribunal, but that must be done by May 31st. Commercial, industrial, personal, and utility personal is the same, but they also must file their personal property statements with the local assessing unit, and this is across the state of Michigan, by February the 20th of that year. Appeal requirements are under the City of Detroit Ordinance, Section 18-9-3, and that is in accordance with the General Property Tax Act. And the State Tax Commission does generate a calendar with required dates every year. The March Board Review begins on Tuesday following the first Monday in March and ends the first Monday in April. You want to check the dates. We may, the way the law is situated, it says on or before the first Monday in April. And oftentimes, while we try to string it along as far as we can, Detroit being the largest municipality in the state with the most number of parcels to handle, we have to give the assessment office time to make all the proper calculations and adjustments to make sure that the Board of Review is able to sign an assessment roll or sign our records back over to the assessor's office so that they may be able to go to the county treasurer's office for equalization by that Wednesday. So typically we may end at least a week before that first Monday in April. So make sure that you check the dates. There will be a legal notice that will be released and put in the newspaper, Detroit Legal News, prior to, actually 3 different times, prior to the official meeting of the March Board of Review. When appealing to the Board of Review, you're going to be required to fill out a Michigan Treasury Form L-4035. It's going to list you as the property owner. It's going to have last year's information and this year's information. And we need to make sure that that information on that form is correct. And you must state your reason for appeal. You cannot just say, my taxes are too high, even though sometimes I might even agree with you. If you have a personal representative, need to make sure that it reflects proof proper ownership. The Board of Review may require that you bring in proof of ownership, because if a question comes up as it relates to, sometimes things are probated, sometimes things are going through trusts, or there may be some other factors involved. And so in those cases, we want to make sure that the person appearing in front of us has the proper authorization. And if it is the owner, we want to make sure that they actually are the owner of the property. If it is a representative, they need to have a notarized letter of authorization to represent that property. You want to come prepared. It is important to clearly state your opinion and provide the facts to substantiate your opinion. You want to provide photos, you want to provide estimates, sales studies, comparisons, CMAs, BPOs, whatever else you can find, or if you want even to use an appraisal. But with appraisals, you want to be careful. Do a full evaluation of your property. Year built, type, whether it's brick, frame, wood, square footage, condition of the property. If you're having structural issues in the basement, there's water leaking or certain things coming in that should not be, things that directly affect your property value. But don't tell us that you got to paint the walls, because that's maintenance. Don't tell us that, you know, the cat or the dog, you know, clawed your sofa or your couch, because that's your personal responsibility. But those things that actually directly affect the value of your property. Do a full evaluation of your area, good and bad. Again, sales study, CMA, you want to come with as much information as possible to be properly prepared. Because the assessor's office, again, through this reappraisal, they're spending a lot of money to make sure that this reappraisal goes correctly. And I have to, the new chief assessor, Lisa Hobart, I have to give her a lot of credit. She is doing a yeoman's job in trying to make sure that, you know, this thing is really, really tight. So again, when you come in front of the board of review, you're going to need to, this year, you're going to need to really, really be able to substantiate your reasons why your assessment is not correct. And I'm not saying that their process is perfect. You know, as much as we would like, nobody gets 100%. There may be an error, there may be something that somebody missed, and that's again why it's going to be important for you to do your homework in terms of reviewing information. Value is an opinion, and everybody's got one. Every opinion is based on what someone knows, but more importantly, what they don't know. And it's truly no different when it comes to housing. What you believe may be different from the assessor's opinion, but your opinion is based upon information that you directly have, and it also may be a little bit more personal. The assessor, though, may be a little bit more objective in making a determination in the value of the property. And when you're talking about, again, doing appraisals, and again, this is where sometimes we go out and we want to find a professional or someone to come in and say, well, I'm going to prove the assessor wrong. And we go out and we hire an appraiser. But I want you to be very, very careful with hiring an appraiser. And the reason why I'm focusing on appraisers is that appraisers do really good work, but it has to be focused on a specific task. It has to be focused on a specific task. So let's talk a little bit about the difference between property assessment versus bank appraisals. Assessments are typically based on a mass appraisal and prepared as of tax day. Appraisals for banks are based upon a singular appraisal method generally prepared as of the date of the subject property, the subject property was inspected. Bank appraisals may not reflect tax day. Mass appraisals looks at the valuation of properties on a large scale, like a neighborhood. The strengths of the mass appraisal system include consistency in collecting information about properties, consistency in valuation approaches used, strong local data sources and geographic competence, strong objectivity by the user, the assessor, and other factors that's given to the assessor's office through the state tax commission. What's bad about the assessment process? Less time may be spent on inspecting a property. Again, when I started, 458,000 parcels or records were in the system, and at that time they had 10 appraisers. Less time may be involved in qualifying sales transactions. Sale and rental information may be limited. Financing and sale concessions may not be known. There's a typo here. Condition of the property was the condition. Oh, I'm sorry. Yep, that's right. Condition the property was in when sold may be assumed. There's that word assumed again. May not have identified negative features of a property and then other factors. Strengths of a singular appraisal approach. Many have greater information about the property, inspected interior, exterior versus exterior only. Real quickly, part of the assessing process is that an assumption is done of the square footage of your home from the outside. They do a perimeter scaling of your home and then look at the type of property that it is, again, whether it's brick, wood, frame, so forth, and they make an analysis from the outside of your home. An appraiser is going to come inside, and if that's what you're hiring them to do, is going to come in and do a full inspection of the property and look at the square footage both inside and out, and also may find certain things that are deficient of your property relative to, again, the value. So that is, again, a key factor that I want you to consider if you're considering hiring an appraiser. I'm not advocating for appraisers. I just know that a lot of people use them, and I just want you to be armed with the right information if you're going to bring an appraisal in front of the Board of Review. Many have greater confirmation of sales used to compare the property to, greater communication of the appeal process taken, oftentimes have greater communication relationship with brokers for information used in the appraisal. And so again, when you're talking about where they get their sales from that they're going to use in the appraisal, where that information comes from, they may ask other brokers or real estate individuals or the real estate professionals about sales in the area. They're going to use MLS and other things, other tools to try to create a value that they believe that in terms of the value of what your property is worth. But there's a downside too. And tell me if any of this stuff sounds familiar. Weakness in the singular appraisal. May not have inspected the property at all. Many banks order what's called desktop or drive-by appraisals. They really don't even, for banks, and I'm not trying to pick on them, but they're trying to get a loan done, and unfortunately, in underwriting sometimes, they just need the appraisal to be a number in order to get that loan to go through. So you want to make sure that, again, if you're using an appraisal, where that appraisal came from and how that appraisal was determined. May not have geographic competence. They may go outside of a respective territory in terms of determining the value of the property. Less time may be spent inspecting the property. That sounds like something that the mass appraisal process may have missed. Less time may be involved in qualifying sales transaction. I heard that before relative to the mass appraisal. Sales and rental information may be limited. Financing and sales concessions may not be known. Condition the property was in when sold may be assumed. There's that assumed again, and may not have identified negative features of the property, lack of care, maintenance, and other things. And again, care and maintenance may not necessarily affect your assessed value. Two key things that I want you to also remember. All this information relies on the work performed. If you're going to have an appraiser or get an appraiser, make sure that they are qualified to do what it is that you're asking them to do. These are your dollars that you're going to be spending. All right? And I'm just going to make a suggestion. Before you hire an appraiser, do some research yourself. This is a really great community group, and you may be able, through even your own resources as a collective, to be able to create some sort of, whether it's a comparative market analysis or some type of an approach to determine the value of your properties as a group. Information used by the appraiser. If you use an appraiser, make sure the appraiser bases standards on that given by the State Tax Commission. Why do a singular appraisal approach if your value is being based on mass appraisals? And if an appraiser is using that mass appraisal approach, it will state it right on the appraisal, because he has to. So again, I want you to arm yourself with information that you can use. And I keep saying certain things over and over because, again, this is the first reappraisal the city of Detroit has been through in over 50 years. And the city of Detroit is going to have a lot of information relative to sales studies and a lot of information that it's going to use to rebut or refute whatever you bring to the table. Tax day, December 31st. It is a very important date. That is the date that is used to make sure that all information relative to your assessment going forward is being used, is all the information that was compiled before that date. Sales studies, condition of property, anything concerning your property is based upon anything prior to December 31st. So, a sum of your assessment. Your assessment, again, is an opinion, but is based on factors. So it's kind of contradictory, isn't it? It's an opinion, but it has factors. And based upon all the things that I've said and all the things that people will tell you, this is the most defining component of how your assessment is determined. And this is actually what the law says. True cash value means the usual selling price at the place where the property to which the term is applied, it is at the time of assessment, being the prices which could be obtained for the property at private sales. Now, there is a number of things that continues after this, and it talks about auctions, it talks about distress, but this is the component that the assessor's office is going to use the basis of in determining your assessment. And it's the most probable price in terms of money which a property should bring in a competitive and open market under all conditions requisite to a fair sale. Now, again, the State Tax Commission gives them rules and guidelines how to apply distressed sales, auctions, government sales, and a lot of other things determining your assessment. But this is the basis of how your assessment is done. True cash value is determined by the assessor's office through a cost manual that is given by the State Tax Commission. The State Tax Commission may provide additional rules and guidelines. There will be county multipliers that will be used, and then what's called economic condition factor, which is a use of things that have occurred within the county along with the whatever local district in terms of economic conditions. Your assessment cannot be higher than 50% of the true cash value. So if your true cash value, meaning what they believe the property can be sold for in an open market, is $50,000, your assessment cannot be more than $25,000. Information regarding very specific things relative to all of this is available on the State of Michigan website. LORA is the Licensing and Regulatory Affairs, is where it's primarily everything is listed, but it is under the State Tax Commission. And they release bulletins every month as it relates to how local assessing units should deal with the various different things that's under their purview. So, with all that being said, the March Board of Review. So now you've armed yourself, you've collected your data, you got all the things that you're ready to come into the March Board of Review. You receive your decision letter from the Assessor's Review because you came in during the 1st and 15th of February. I'm going to stop right there for a quick second. This year, and this year only, the Assessor's Review is being extended because of the reappraisal. It is going to start January the 28th and go through February the 23rd, I believe. January the 28th through February the 23rd. But check with the assessor's office for sure on the exact dates and times. But it is being extended because the idea here is to give people the opportunity when they get this new information to come in and ask questions and actually get this reappraisal correct. It is going to be because of your ability to come in and say, listen, tell me about this and explain this to me, why my assessment is what it is now, you say what it is now. Because at the end of the day, if that assessment increases, it's not going to immediately affect your taxable value other than, again, an increase by the rate of inflation, but it is going to increase over time. So at some point over the years, it will catch up with that assessed value. It may take a long time, but it's going to get there. So you've received your notice. If you haven't received your assessor's review notice, contact them. Say, hey, listen, I didn't get the information that when I came in during the assessor review, and what did you do? If they may have satisfied whatever your questions or concerns were, or gave you an adjustment that you were satisfied with, and you'll have no reason to go any further. If you're not satisfied with that decision, you will then file what's called an L-4035, which is an appeal to the March Board of Review. That form must be completed, and an appointment will be set for you for the March Board of Review. If you have not heard about your appointment for the March Board of Review, again, pay attention to the dates when the board is meeting. If you have not received your information for your appointment for the March Board of Review, contact the assessor's office and say, hey, listen, I did not get my appointment. Make sure that you've collected all your data, and the most disheartening part for me in all of this is that, and the reason why I try to share so much information, actually within the law, the burden of all of it rests with you. It is up to you to make sure that you look at your notice of assessment. It is up to you to make sure that you come into the assessor's review. It is up to you to make sure that you come in front of the board of review, and if you're not happy with what the board says, it is up to you to go to the Michigan Tax Tribunal. Nobody is going to do it for you. Be prepared and be on time. You will have a limited time to speak, and so make sure that you have all your information together when you come in front of the board of review. There will more than likely be a number of people that will be ahead of you, and we try to get as many people through the process as we can as possible. But at the end of the day, we have to hear everybody that comes in front of us. And so we try to make sure that we limit the time, because we want to make sure that everybody gets served in a timely fashion. And that's why I say be on time and be prepared. But we may spend time on a specific individual, because your information may be tested. You may come up with a market analysis or sales or information, and we may do research on that information to make sure that what you're providing is actually what you're stating that it is. On occasion, and I can't actually believe this, but it's true, we have people that come in front of us and they provide information that is not quite correct. Again, it just goes to the idea that sometimes people believe that we don't look at it, and yes, we do. There are 3 approaches in which the Board of Review may consider any appeal. It is the sales approach, again, using sales in the area. It is the income approach. So let's say, for instance, it's rental property. We can look at the idea of how much rent you've collected over the year versus your expenses, or a cost approach, what it would cost to build that property today new, and then apply depreciating factors, and again, use sales studies to help offset any adjustments that may apply to that property. Or we may use a combination of those things to help determine, again, if your assessment is fair. All right. So at the end of it all, you're going to receive a notice from the Board of Review, and you should get that in the mail sometime after the Board of Review closes. And you look at it and you're going to say, what the heck were they thinking? They even got it wrong. And this guy even lives in my neighborhood. And if you're not satisfied with what the Board of Review says or does, you have the right to take us to the Michigan Tax Tribunal. And guess what? I will not even get offended. But just understand that if you go to the Michigan Tax Tribunal, they are a lot more critical of the information that you provide. It is an official setting in a courtroom where you have to provide information to substantiate your opinion against the local assessing unit. So again, make sure that you get prepared. And that is one of the main reasons why I'm trying to share as much information for you today in terms of preparing yourself, because at every step, everybody's going to ask questions now relative to your specific property as to why you believe your value is not correct. And with a full reappraisal being done of the city of Detroit, again, the assessor's office is compiling a lot of information relative to sales studies, and a lot of other information to substantiate the value that they're placing on your property. All right. A couple of other things that the Board of Review has under its authority. This is the Homeowners Property Tax Assistance Program. Homeowners Property Tax Assistance Program, when Treasurer Sabri was talking earlier, actually can assist you with staying current if you're in an ERSPA plan. Again, one of the things that he stated was that if you're in an ERSPA plan, you have to keep your current taxes paid in order to be able to stay in that plan. Through this process, and I know that everybody prior to me has always said that, it's based on income. It is not income alone. Income is the basis in which we start. We have to have an asset test, which is required under the law in order for us to review the application. But in order for a person to be considered, that is the starting point. So the idea of it is that the principal residence of a person who believes that they cannot contribute to the public charges has the ability through the Board of Review to be exempt of taxation by reason of poverty. This is under MCL 211-7U. There are certain general requirements that is through the state statute that has to be met. Own and occupy the property as your principal residence. File a claim through the supervisor to the Board of Review annually. Provide proof of residency, proof of ownership, and meet the federal income guidelines or the alternate guidelines that is set by the local assessing unit. The City of Detroit, through the Board of Review, and then sent on to City Council to be set by resolution, establishes guidelines in which a person may be exempt of property tax under this act. Two other quick important things regarding this. One, if you file for this exemption, it does not preclude you from filing for a review of your assessment or filing an appeal regarding your assessment. They're totally two separate things. This is a process for you to find assistance based upon your income and a couple of other things that I'm going to talk about in just a second. And then the other is, again, trying to make sure that your assessment is fair to ultimately determine to make sure the amount of taxes that you're paying is fair. The most important thing in which I take a lot of pride in this particular process is that there's one component of this statute that gives the Board of Review some very unique authority, and it is called consideration based upon substantial and compelling reasons. And we have the ability to kind of look past the income for a second and say, this individual is suffering a true hardship. They have a medical situation that's in the house that is unrecoverable from. There is an individual in their home that they have to spend a tremendous amount of their income to take care of. There are a number of things that they have to do relative to maintaining a quality lifestyle that needs to be done in order to just, maintain from day to day. And sometimes, we believe that bureaucracy forgets that. This is where I am, again, proud that to say that the Board of Review tempers law with compassion, but we have to know. Do not submit an application without telling us the whole story. Please do not submit an application without telling us the whole story. This gives the Board of Review the opportunity to kind of look inside your household and make a determination based upon factors that we may not necessarily know. We don't have a crystal ball. We don't have the ability to just, look around at every house and say, okay, well, this person should be exempt. This person should be exempt. No, they should not be. You have to tell us. And if you don't share that information with us, we can only go by the information that you provide. So please, again, whether it's yourself, whether it's a neighbor, anyone that you know that is struggling, the Board of Review cares, we're concerned, and the one thing that we have to make sure that we maintain in our neighborhoods is home ownership. And it's going to be up to us as collective, as a community, to ensure that that happens. One of the other exemptions that falls under our purview is the Public Act 161, Disabled Veterans Exemption. This was written into law in 2013. Originally, it was 211 7.B. Before it was 161, and it's still that section of the General Property Tax Act. Prior to the change, it only dealt with what was called veterans with pecuniary circumstances, or they had special adaptive housing, wheelchair ramps, special assistance set up for them within their homes and so forth. The act changed again in November of 2013, and a veteran only needs to have one of three circumstances going on with them. One, receiving 100% benefits through a service-connected disability, 100% benefits through a service-connected disability, or special adaptive housing. Again, that's that pecuniary thing I was talking about a second ago, or considered individually unemployable. So 100% benefits on service-connected disability, special adaptive housing, or considered individually unemployable. It is one of the three. It is not a combination of, it is not a I'll slide it in or I'll turn it over this way. It's simply one of the three. It is provided through the letter that is given to that veteran, through the Department of Veteran Affairs that is given to them each year. It is an annual process. You must file for it annually, and it is done on a Form 5107. And the things that you want to provide to the board when you're applying, again, Form 5107, which is a Michigan State Treasury form, your veterans letter showing your determination given by the Department of Veteran Affairs, and a copy of your ID providing residency. And so this is a very important point that I want to go back to also with this. This is for the homestead. This is for the homestead, not for just any property that a veteran owns. This is for the homestead of a property that a veteran lives in. The exemption also applies to the unremarried spouse of a veteran. The unremarried spouse of a veteran. And they must be a resident of the state of Michigan. So this does not mean that you have a house in Florida as your as your primary residence, and your Michigan home is where you come to vacation because we have such great fall and winters. But it is you must be a resident of Michigan, and it must be your primary residence. And again, it must be filed annually. And for veterans, the same thing applies. This is something that can assist you if you're in a ERSPA plan. If you're in an ERSPA plan, again, because your responsibility is to keep the property taxes current in order to stay into that plan. So we've covered a lot of stuff today. And these are the things that I want you to remember. Make sure the property reflects proper ownership. Property ownership is required to file an appeal. A letter of authorization, a notarized letter of authorization is required if a representative is going to appeal on your behalf. In the city of Detroit, you must appear before the assessor review between February 1st and the 15th. This year is being extended. Check the dates with the assessor's office to be sure on what those exact dates are. Again, I believe it's January the 28th through February the 23rd. The decision of the Board of Review may be appealed to the Michigan Tax Tribunal. Commercial, industrial, and personal property may be filed directly to the Michigan Tax Tribunal, and it has to be done prior to May 31st. If it's personal property, you can file by May 31st, but you must file your statements with the local assessing unit by February the 20th. The job of the Board of Review is not to determine, if your assessment is fair, not how much tax you will pay. Our job is to determine if your assessment is fair, not how much tax you will pay. Your assessment is the beginning stage of property taxation. The assessed value of your property should represent 50% of the true cash value. The assessment process is done each year under specific guidelines. State equalized value is a result of county and state equalization process. The taxable value in certain processes called the cap value is multiplied against the millage rate to determine your tax. The taxable value can never be higher than the assessed value. Your taxable value can only increase yearly by the rate of inflation, which is the CPI, no more than 5%. Your taxable value calculation is the current year's taxable value, last year's taxable value minus losses, times the CPI plus additions. When there's a transfer of ownership, the taxable value will rise to meet the assessed value the following year. This is called an uncapping. I just want you to remember that. So when a person is buying a property, one of the reasons that people often ask, why are my taxes higher than theirs? Well, your neighbor was there for 20 years, and so their taxable value was creeping up by the rate of inflation while the assessment fluctuated with the market. And when you bought your home that following year, the taxable value went to meet the assessed value. That is one of the primary reasons of the difference in the amounts that individuals pay in property tax. If you own and occupy a property as your primary residence, you may receive a principal residence exemption. You must apply by May 1st for it to reflect on your summer tax bill. The Board of Review may lower your assessment and still not reduce your taxes because millage rates and taxable value can change every year. I'm going to stop right there for a quick second. How I talked about earlier, how your assessment can fluctuate, and your assessment because of market is up here and your taxable value is down here. Well, if they adjust your assessment and your assessment is $25,000 and your taxable value is $12,000 and adjust your assessment down to $20,000, it still does not touch your taxable value because it has not fell even or below your taxable value. Your assessment fluctuates with the market. Your taxable value is used to calculate your tax. And if your assessment has to fall equal to or below for your taxes to at least stay even or go down. And I know oftentimes you see that a lot. It's like, well, man, they say my assessment went down, but my taxes still went up. That's the primary reason why. Your assessment can decrease whatever it decreases by the market, but if it does not touch your taxable value, your taxes will not go down. Have you reviewed your record data? Make sure that you know and understand what information the assessor's office is using in order to determine your assessment. You may receive an assessment notice that reflects your current year's assessed and taxable value, and you have the right to appeal the assessed value placed on this notice. Whether you receive it or not, you have a right to appeal your assessment. Whether you receive an assessment notice or not, you have a right to appeal your assessment. Do not wait. And I hear this so often. I was waiting on my notice to come in the mail. I was waiting on this. I was waiting on that. Do not wait on any government agency to send you anything when it is your right to appeal that. You must appeal during the specified dates and times. You must be specific about your property issues, bring estimates, photos, and other evidence that will support your appeal. You should do your own sales comparison, but be fair. Do not look only at distressed sales. A fair comparison looks at the entire market with limitations on sales under duress. Do you live in one of Detroit's 52 NEZ homestead neighborhoods? Again, there's 52 districts within the city of Detroit that are NEZ territories, and then there are new developments that are considered NEZ new and NEZ rehab. If you cannot pay your property tax, there may be assistance through the Board of Review, and that is through the Homeowners Property Tax Assistance Program, where we look at the circumstances going on within your home to make a determination as to whether or not we're going to eliminate your property taxes for the year. And through that process, we have the ability to eliminate it either in whole or in part, simply meaning that we can wipe the taxes away. The solid waste fee still remains, but under a current agreement with the administration, it is cut in half from $240 to $120, or if you're in a multi-unit building like a two-family, it is, so that's is $170 instead of $340. All right. Under PA 161, disabled veterans exemption is one of the other things that the Board of Review has under its control. If you get behind on your property taxes, please contact the Wayne County Treasurer. Again, the Board of Review has little to no authority when it comes to adjusting because of value, any previous years. We can only do corrections based on what's called errors and corrections of mutual mistake of fact. Again, principal residence exemption. You owned the property for 10 years and you did not have it PRE, then again, current plus up to 3 previous years. Make sure that you talk to Wayne County Treasurer's Office about any issues that you have regarding any back taxes. So things to just kind of think about. 1, millage rates. We vote on millage rates, and I want to say since 1976, even before I started voting, the City of Detroit has not found a millage rate it does not like, except this current election. We found a few. And the thing with millage rates is that through our current process, I believe that individuals who are not property owners have the ability to make decisions on how much property tax other individuals pay who are property owners. So when things get added to a ballot, understand that if there are 100 people voting and only 10 of them are property owners, those 10 are affected by the vote of the masses. So certain things as a group or as a whole, as a community, we may need to look at or consider. Oftentimes I look at our assessments that are before us, and oftentimes it's not really the assessment as much as it is the millage. And people often talk about, well, heck, I go over to this community and their taxes are not as high. Again, through state equalization, everybody is paying their fair share. But as it relates to why Detroit taxes are what they are, a big portion of it is the millage rate. Fees. There are certain things that may appear on your bill that is a fee and not a tax. Your solid waste fee is a fee and not a tax. Administrative costs. There may be an administrative cost added to a tax bill. So when you look at how the tax bill is calculated and then they plunk on that, I think it's a 1% administrative charge for the calculation or processing of the tax bill. Again, so look at your tax bill as a whole. There may be other factors or other things that's used to aid in the calculation or things that are added to your tax bill. And that will fall under oftentimes authority, where an individual or a specific government office has the ability to change or alter the millage rate based upon certain other circumstances, general debt, or certain lawsuits that may have occurred that gets applied to everyone's tax bill. Somebody started building something and it didn't get finished. And so, maybe the county executive decided that, hey, listen, we need to apply a part of this to everybody's tax bill in order to just kind of spread the cost around a little bit. So again, authority may change the amount of tax that you pay because of the controls or things that they have under their purview to, again, balanced budgets. All right, so with that being said, that is it, and I am open for questions.